Thanks, Yashasri. On behalf of ICICI Securities, we welcome you all to Q2 FY24 results conference call of Akzo Nobel Limited. We have with us Mr. Rajiv Rajgopal, Managing Director, Mr. Krishna R, Chief Financial Officer and Whole-Time Director, along with Mr. Rajiv Jha. Now I hand over the call to management team for their initial comments on quarterly performance, and then we will open the floor for question and answer session. Thanks, and over to you, sir.
Good evening to everyone. This is Rajiv Rajgopal, joined by Krishna, my CFO, and Rajiv Jha, who is the company secretary.
Sir, I request you to be a little bit louder, please.
Yeah. Can you hear me now? Is it better?
It is better, sir. Yes.
Yeah. So good evening to everyone, joined by Krishna, CFO, and Rajiv Jha, company secretary. What we will try and do in the next 5-10 minutes, and I'm not going to use the deck. The deck that we intended to use is already loaded on the website. I thought we will keep it more for Q&A and any questions that any of you may have. But I just thought I'll just quickly outline how the quarter has been. Indeed, as all of you have seen, both the industry numbers and our numbers, that it has been a relatively tougher quarter. But despite the headwinds of erratic rains and weak consumer sentiment, we continued our journey on profitable growth. We've reported a revenue of close to 956.3 crores, a 3% growth coming largely from the B2B segments, projects and paints and the coatings businesses. The retail sales was relatively muted. The gross margin percentage improved by 600 bips, which was mainly attributed to raw material cost easing, coupled with favorable mix. With increasing scale and efficiency, we continue to deliver on our double-digit growth profitability with a 33% growth in EBITDA, and our profit after tax was 94.2 crores, up 44%. Right. So really, for me, I believe that as far as the first half is concerned, we continue to be in the top 2 in incremental growth. We've achieved new records across most parameters in absolute terms. All the strategic drivers, including product portfolio, in reach and efficiencies, are working well. The PAT for the 6-month period has grown 43%, strong, obviously supported by stronger EBIT, operating profit, and other income. Yeah, our OWC to revenue percent remains one of the strongest in the industry, reducing from 9.6% in September 22 to 5.7% in September 23. In fact, I must be proudly say that our paints business is almost now on a negative working capital, perhaps something that I had only achieved during my FMCG days. This has contributed to a healthier cash flow, which is supported by our capex and dividends. We ended the year with liquidity of almost 612 crores. Yeah, so that's what I have to say in substance on behalf of Krishna and myself. I thought we will use this time to take your questions and answer any specifics. I'm also mindful of the fact that this is an open call, and hence, when in an open call, you have a lot of open people who are openly invited. So bear with me that I will not be able to share any competitive details. I think that's the nature of our business. And given the fact that there are a lot of people who are making a lot of inquiry, you would appreciate the fact that, I will be a little guarded in some of the comments that I get. Yeah, I want to, before I hand it over for the Q&A, I want to deeply thank our investors who've stayed and been a great support. And, thank you to all of you. As all of you know, I've been re-elected for the second term as managing director, and this would not have been without the support of all of you and all the employees at Akzo Nobel. So once again, a big thank you, and back to you, Yashasvi, Manoj, and team, Nilesh and team, for the Q&A. Yeah, so over to you.
Thank you very much, sir. We will now begin the question and answer session. To ask a question, please click on the raise hand icon available on your toolbar or on the Q&A tab available on your screen. You may also post your text questions on the ask a question tab available on your screen. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a question from Atharva Bhutada from Purnartha. Please go ahead.
Hello.
Yes, we can hear you.
So actually, I had 2 questions. One was regarding that all paint companies have hinted a slowdown in rural spending and downgrading in paints in the rural sector. So have we seen any uptick in demand in rural after the September quarter, or has the market share been lost to local players?
Okay, so let me answer your two questions. First, as far as we are concerned, and I said it perhaps also in some of the interviews in the morning, we've actually grown in rural in our paints portfolio, and I assume you're talking largely paints here, right? Which is
Yes.
about 60% of our overall sales. Yeah, so yes, in paints we've grown in rural in Q3, and this is largely coming out of our distribution efforts, which has been ongoing for the last almost a year and a half, right? So that's the first. But remember that we are starting at a much smaller base than some of our larger competitors. So I just want to be fair that yes, if you look at an aggregate level, rural is because of the erratic rainfall and spends, etc., having a bit of a challenge. But we've seen a growth because of the distribution gains that we've made in many states. Your second question, I think you've seen last full year we were the second fastest growing player in the paints business. And even if you look at the first half, we are still, even if I keep scolding aside for a minute, I see no reason why we've not. Yes, if you look at specifics, we would have lost some market share in mass market, which constitutes about 35% of the market. But in all the others, we significantly gained. So at best, we would be gaining about 0.1 to 0.2 because the market size is so big. But for me, I'm between whole to 0.1, 0.2 gain, largely coming out of our premium because our premium grew quite significantly in the last quarter, very high single-digit growth in premium. Yeah. Hopefully, I've answered your question,
Atharva? Atharva, are you there on the call? We cannot hear you.
Hello?
Please check if you're muted. Yes. We can hear you now, Atharva. Since there is no response, I'll announce for the questions again. Ladies and gentlemen, to ask a question, please click on the raise hand icon available on your toolbar or on the Q&A tab available on your screen.
Yashasvi, Manoj here. Can you hear me? Can I ask a question?
Yes. Please go ahead, sir.
Yeah. Rajiv, Krishna and Rajiv, apologies, had some connectivity issues initially. I'm sorry for that. So sir, few clarifications. One, when you mention you're the second fastest, so in that calculation which you're doing internally, are you counting non-paints also? Let's say the putty and other sieves and let's say, is it a decorative comment or it's a paints comment?
No, it's a paints comment, but we don't include anything which is non-paint. I mean, it includes waterproofing, it includes putty, but it does not include fabric, furnishing, lighting, kitchen, adhesives too. Yes, because we don't participate in our portfolio. Adhesives is not there, so we look at addressable market because otherwise it's not a core paint and coating from our perspective. So we only look at those.
Sure. So that's very helpful actually, and good luck, sir. And secondly, it's not really about urban rural, but generally, there has been stress in consumption on the bottom of the pyramid, which we have observed, in the last, let's say, couple of years, and there's a comment that is bottomed out. While it's a short term, but I'm trying to understand from you is that we started seeing some stress in, let's say, restaurants and about a year back. Apparel retail maybe 6 months back. What's your sense on paints business? Whichever way you cut it, actually, urban, rural, premium, mass.
Yeah. So look, firstly, the overall, I'm also a little surprised as much as the rest of the industry. When we started the quarter that went by to what ended, obviously the narrative was slightly changed. Even if you were to ask me in the month of June, July, we were looking at, at least a good double-digit growth because we said it's an extended season. But two things that dramatically changed. One, the erratic rainfall, but that's not the bigger reason. I think the bigger reason is, like you rightly say, a bit of slow demand. And we started seeing this from more pronounced in September than we saw it in July and August, right? So I think that's the two where we started seeing credit in some of the markets, particularly in the eastern part of the country, really coming under credit huge squeeze. So that's the way we see it. It's something which is, Manoj, I just said it, we actually, in the paints part of the business, had a slight decline in the metros last quarter. We actually grew very well in the rural markets. Now, obviously, it doesn't compare with our larger peers because they already have a significant high base in the rural compared to us, and obviously our contribution is smaller. But that said, nevertheless, this has been an effort of last 1.5 to 2 years where we've driven distribution, led gains, and obviously the acceptance of the brand in some of the the smaller towns, tier 2, 3, 4, 5, is obviously starting to pay dividends, and obviously Dulux is getting some significant market share in those markets because we are starting also from a smaller base, right? So in nutmeg, to answer your question, how do I see it going forward? Look, I see paints, obviously, this quarter will have a bit of festive tailwind, but I need to wait and watch till December to see how much of the tailwind is going to translate to, getting back to 1.2 to 1.5 times GDP. What we see is, if you remember in paints, I always used to present in all the investor shows that we are about 1.2 to 1.5 times GDP. What's happened now is, if you look at the last quarter, we've come to half of GDP. If you ask me, I've done some stochastic analysis with Krishna, and we see that this current moving to about 1 first before getting back to 1.2 to 1.5. Now, what is the time frame? That's something that we will take a little 3 to 6 months before coming in, but it'll take a bit of time before we really get back to the heady growth days. Also, the competitive intensity is going to increase, early next year, and for what reasons, right? So we just should be mindful. However, does it mean that, the industry is going to see low growth? Not at all. I still think it's a pretty high growth industry. It's just that the contours will change. There's election next year in May, and as we've seen in the past, during the election year, particularly the infra, work will slightly slow down from March, April. So those are things that we have to be meandering. Today, if you look at our business in the last quarter, just to give you some highlights, paint sales was pretty much flat, literally flat. And the coatings business grew high single digit. Not only coatings, even within paints, our B2B business, projects business, which constitutes 20% of our business, actually grew very high double digits. So, that clearly tells you what's happening is it's reflected in the core sector index of the country, where you're seeing the companies which are in real estate, infrastructure like L&T, etc., some of the people we work with and all doing very well. You're going to see that continuing till, in my view, till March, April next year. Then you will see a bit of a hiatus till the elections are done. And irrespective of what happens, hopefully it'll all be positive for Indian economy. And, I think then it'll start picking up again in June, July next year. So long term, I don't see an issue. I still see in India, the GDP growth story and the paints growth story being intact. Yes, there'll be intensifying competition, but we are geared. We are ready.
Interesting. Thank you for the detailed response, Rajiv. The third one, but before that, let me make an announcement. So anyone, investors, analysts who wants to ask a question, please do raise hands. Use that option. Rajiv, another one, your observation on the negative working capital. That's a brilliant achievement. Is it fair to say that you're the first, probably, Indian paint company to achieve this in history?
No. See, Manoj, look, it's not to compare with others. Everybody has got their strengths. There is, let's be honest, there is a leader with a 55% market share. So I think, let's give accolades to all the people who deserve it. From our perspective, the negative working capital, being a challenger brand, a number 4 player, enables us to give us the license to be on a profitable growth journey, right? Are we the only one? Yeah, probably when you look at the numbers that have got reported, yes, we are at about 5%. And I'll ask Krishna to just run you through, some of the meaning. But what are we focusing on? We are focusing on mainly collecting overdue, keeping our, slow and obsolete inventory, etc. So running what I call the integrated business planning process in a pristine manner is what we are really focusing on. I think that's our strength as Akzo Nobel. Krishna, you want to add some numbers?
Just additional clarification, Manoj, in terms of the negative working capital comment is pertaining to the paints portion of the business.
Yeah, it's negative as to the paints. Overall, it's about 5%, 5-6%.
Yeah. No, sir, even within paints, actually, what has been the key drivers for this? Is it that your distributor-led business has now reached the significant size, which is mitigating the working capital, otherwise positive working capital elsewhere?
Yeah, no, it is. But, let's be honest. One of the things I always work, and we always work as a team, is to make sure our distributor stickiness is very high, right? So obviously, I don't keep too much of inventory in my distributors, It's a typical FMCG model, right? So to that extent, it's also, I think, good credit management that even our distributors have managed to win. It's also making sure the right portfolio, etc., comes. I think it's a suite of stuff. A lot of work done on supply chain management, actually, where we've used iconic, marquee, people to help us to put the right agenda. And then Krishna and the team leveraging on what I call ways of working and war on waste to make sure that we are able to drive our costs efficiently. Yeah.
Understood, sir. One clarification on this from the other side of the table is that any which way, let's say, working with positive working capital constraints or constricts growth?
Well, as long as the working capital is rightly deployed, Manoj, look, I think what it helps is on return on capital employed. Look, this industry has got a 20-22%. If you look at the market leaders, 25% return on capital. We may be at about 30-33 right now.
36.
Right?
Yeah.
36 is right. Now, look, I think beyond a point of time, ultimately it's about how you use it to unleash growth. You're right. So,
Yeah.
we'll take it at one step at a time. I think we've, from where Akzo is coming, when I came back into the business in 2018 to now, I think the focus has been to how do you really accelerate growth, right? And I remember many of the investors who are today on the call really telling me, it's not about what you say, it's about what you do. So I think hopefully in the last couple of years, at this quarter gone by, we've demonstrated what we can do.
Understood, sir. Let me take a question which has come in the text window. Sorry, sir.
Krishna, you want to say something?
Just to add on, Manoj, the working capital management and growth, we are trading it carefully. We are not doing anything crazy to hinder the growth.
Yeah, that's right.
Fair enough. Absolutely. Understood. Let me take a question which has come in the text window. This is from Dheeraj Dave from Samvad Financial. He's asking, I'm just reading it out verbatim. What is the share of new products launched in the last 24 months during the second quarter of FY24?
I think that's quite similar. Most people, it's around 10%. 10% is the revenue contribution coming from new products for the last 24 months. I think it won't be very different for any player, Manoj. We are there. I think I'm pretty proud of some of the work that we've worked on the new product and portfolios. So we are currently at about close to 10-11% of the portfolio.
Yes, you might want to announce for the raise hand option once again, and we'll probably wait for a minute just to check any further questions.
Sure. Ladies and gentlemen, to ask a question, please click on the raise hand icon tab available on your toolbar or on the Q&A tab available on your screen. You may also post your text questions on the ask a question tab available on your screen. We have a question from Nirav Savai from Abacus. Please go ahead.
Yep.
Mr. Savai, can you please unmute and then speak?
Yeah, sorry. My question is more on the project side of the business. Now, here we have said that we have grown by higher double digits and have a significant contribution to our overall decorative revenue. So, am I right in understanding that it contributes to about 40% of our decorative business?
20%.
20%. And we have grown high double digits, but in this 20% of the business.
Yes.
So, despite that, we have seen a flattish kind of a YOY growth on the decorative business. The retail part has actually declined.
That's right. That's right. A very low single digit. I mean, maybe basically, almost flattish to low single digit, very low decline. Yes.
Right. And on the industrial side, how do we see demand panning out for the second half? Or do we see improvement there? Or this is something which is again...
We've grown high single digit in the last quarter in the industrial businesses, pretty much. I see that continuing. Can we get to double digit? Yes, I do think so. It also depends on execution of a few orders, stability, etc. If everything going good, I think we should be looking at close to early double digit numbers for the second half in our businesses.
Right. And on the A&P side, do we see acceleration in the second half, or would it be more or less similar to what it was in the first half?
You tell me. I hope you're watching India matches on the cricket.
No, I mean, you have your internal assessment in terms of demand and...
Okay. My internal assessment is okay. So, look, so let me just tell you. I think we were at about 1.5% of the revenue. We said we'd take it to 3.5%. We are on that journey. And, we are now slowly moving A&P to 5%. Look, I think what I've not said, and perhaps even when Manoj asked the question, last quarter we grew volume at a high single digit in both our paints and coating business. And we have taken some small price corrections in some parts of our portfolio because, Dulux is one of the more expensive paints in the market, right? So we had to do it because in some of the categories that I mentioned in mass specifically, etc., obviously, when you come with a lower share, you were not able to sustain the premium. So we decided that we need to take some corrections. Right? So a combination of that is what has happened. And volume growth is a good way because, net of putty also our volume growth is pretty high single digit. So, all I would say is I think we seem to be going in the right direction. Let's see. We'll have to keep our fingers crossed. I believe in taking one step at a time. No point predicting how it's going to be ahead because you don't know whether, what the steps ahead are going to entail.
Right, so 3.5 to or a 5% kind of a ASP spend is over a period of time.
Yeah.
It's not something
yes, and we are pretty active on World Cup cricket. For those of you who are seeing it across, it's omni-channel stuff. We are also on Hotstar. Now, if you are watching it, will obviously agree that we've seen a lot of Dulux. At least the TV anchors in the morning seem to suggest that we have one of the most visible brands.
Right. All right, so that's it from us. Thank you.
Thank you, Raghav. Thank you.
Thank you. Mr. Menon, would you like to read the text question or should I go ahead?
Yeah, you can. I'll take it actually. There's a question from Lakshmi Narayanan KG from Tunga Investments. Lakshmi is asking, sir, since the start of the year, we are halfway right now, which aspects of your business performance has positively surprised you ahead of your expectations and why? And there is a further, which aspects of a business has disappointed you and what are you going to reinforce the positives and address the disappointment?
Very good question. Thank you. Thank you, Lakshmi. I think that's a very good question. Look, what is really the positive part? First, look, in our sort of a business in paints and coatings, we're a people business. We just recently finished a global survey done across all countries called Voices. This is a survey which all our 1,500 people can take it, and all the line managers, about 250 of them, can see the results immediately. It's not like you have to wait for 2 months to get all the results and share it. People get online. What I'm pleased is that India has got one of the highest scores in the Voices survey globally, and our team leaders have got been given a huge pat on the back. Why is this important? Because we can talk of results and business, but if people are intrinsically not happy and not doing, feeling stifled, then I think it's a very short-term growth that we are talking about. So to me, that's the first. The second, it was a positive surprise, because I did expect a reasonable number, but not as high as what eventually happened. Second, I think on the B2B businesses, while yes, the core sector index is a reflection of the fact that B2B businesses all across, you can see it in infra, you can see it in real estate company results, are doing well. I think the upsides sort of helped, and some of the innovations that we put over the last couple of years and the investments that we put sort of were gratifying, and I was pleasantly surprised to see that there's a bit of a tailwind. And what has really been a bit of a disappointment, I think, on the retail side, of course, there is a bit of a demand offtake, but given our market share, I keep telling the team there's only one way to go, which is up, right? So execution in certain geographies should still be world class. That's what is a bit disappointing, and we are working on it. Second is in our portfolio, I think mass market and economy needs to be readjusted. As you've seen the commentary of all our competitors, obviously they've been there longer and they've got a higher share and a higher wallet share, etc. But I think about driving the brand there, building customer intimacy, making sure the painter engagement, etc., of stronger order is something that we are working on. We are mindful of it. I think these are the places. The last but not the least is, in new categories we've entered. These categories have now started contributing to almost 10% of our revenue, waterproofing, wood care, etc., which is significant from our size, given that we've not made any M&A, unlike any of our bigger peers, maybe except one, the market leader, we've not made any M&A. So it's all in-house done. I've not fired or hired anybody for it. It's basically using the existing set of people we've got in our R&D center who are from IIT, UDCD, etc., some of the best engineers we've got to deliver the results. So to me, I think we need to continue that. So yes, there are lots of things that we need to work on, because when you're a challenger brand, you got to run faster, right? And you got to make sure that you solve customer issues and you're on top of things. So I think obviously in many parts there are challenges. In the eastern part, for example, Manipur, we've got relatively a large business in the paints industry there, and unfortunately it's almost zero for the last few months, right, because of the challenges there. But hopefully it should start bouncing back in this month or in a couple of months, right? So I think there are some internal challenges too that we faced. I don't want to illustrate everything here, but suffice to say the team is working on it. We as a leadership team are committed to making sure that we start then slowly building it back brick by brick to deliver double-digit growth. Manoj, hopefully I've answered the question.
Yes, sir. Thank you. Let me, if you need to speak, please raise hands option, and you can come and chat with Rajiv and team. There's a question or a comment actually from Utkarsh Solapurwala from Damos Capital. Congratulations, sir, on your reappointment. What are some of the key strategic objectives that you would like to achieve in your second term?
Thank you. I think the strategic objective is single-minded. I think that's the brief that I've got from the global parent. And I'm hoping that embrace India more and more, which I'm seeing with the new CEO. I think that's something very exciting. Really is how can I start getting market share continue to gain market share significantly in a profitable manner. So really the focus is around working around the adjacencies, working on our gaps on distribution, working on our portfolio, and making sure the brand is far more visible, right? So that's broadly it. I think for me, the personal milestone will be to really say, how can I build scale? Because I think we've got the right cost structure now, and with scale, we'll be able to make it accretive. Of course, we'll continue to reinvest in our brands, but the single-minded objective is how can I drive market share gains in the second term.
Fantastic. Yashashree, if you can announce and hold for a minute or two, please.
Sure. Ladies and gentlemen, to ask a question, please click on the Raise Hand icon tab available on your toolbar or on the Q&A tab available on your screen.
Manoj sir, while the question queue assembles, I think I probably have one question. So if I can go ahead.
Yeah, go ahead.
Yeah.
Go ahead.
Yeah. So thanks for the opportunity. So I just wanted a clarification that at Akzo we have streamlined our strategic priorities on margin, supply chain, and working capital management. So just wanted to hear more about on that front, and just wanted to clarify, or you can say that more information on the point that in your first phase, sir, you had achieved a distribution and portfolio expansion in your first term. So just wanted will it be the second kind of part 2 where you are trying to achieve more on margin, supply chain, and working capital management? So will it be kind of part 2 for you? And yes, are there any internal targets or timelines for the same?
Yeah. So yes, it's a part 2 because for making sure distribution 3.0, which is I'm currently on 2.0, which is really going into smaller towns, absolute smaller towns, right? And we are doing some pilots on something which is really going to be, what's good for India is going to be good for Akzo Nobel India, right? If I were to borrow one of my ex-mentors who run a fairly large FMCG company's phrase, right? So just want to say that, look, I think we are testing some pilots where we are trying to do something very different in the industry. I can't talk about it now, but that is going to be the third leg. But to do that, our supply chain needs to be efficient so that we cater to our customers in 2.0, right? So you're right. I think building an efficient supply chain using AI, using the latest tools, digital, to try and make sure supply chain is ready for the next 2030 and beyond is one of the things that I'm focusing on. And on working capital, I think we are pretty good. I think on working capital, it's fine-tuning it, understanding the drivers and levers of growth, and saying how can I deploy working capital and sweat my assets with good return on investment, right? So because my focus is that how do I put money where my shareholder value can significantly get enhanced in a specific time period, right? Now, what are we looking at? Look, some of the supply chain projects will take at least about 2 to 3 years because we are doing it in 2 or 3 phases. We are right now in the design phase. Then we get into a planning phase, planning and preparation phase, and then into a execution phase. Each phase typically takes about 8 months, 7 to 8 months if you want to make it world class. And India is going to be the pilot for some of the world class thinking and projects that we unveil for Akzo Nobel. So that's the way I'm approaching it. I'm not in a rush because when you want to also attend to the smallest towns, you got to make sure that you do it in a very digitally cost-effective manner. So that's really where we are driving it, Nilesh, if I've answered your question.
Yes, sir. Thank you.
Mr. Menon, we do have one more text question. Should I read that?
I'm just going there. Just a second. Yeah.
Sure.
Yeah. So this is from Atharva, and there are two questions rather. So first is again a follow-up from Atharva Butada. He says, can you please explain how did we manage to get a negative working capital in the paints business?
So Manoj, I think you already in a way answered that question, and I answered that question earlier. But beyond that, the day Atharva tells me what is the secret formula of Coke, I will tell him the secret formula of negative working capital.
Okay, fair enough. Okay, there's a follow-up from Lakshmi Narayan KG from Tunga Investments. In terms of portfolio gaps in the decorative and home coatings, which are the areas you are indexed lower? If one takes the leader at 100%, where are you now, and what is the plan for the next 3 years? He's asking for decorative and home coating separately. Yeah.
No, so look, let me focus on decorative home coatings. We are not. I don't. I assume you're talking of the performance coatings, the coatings business. I'll talk about it. See, in decorative, which basically we are under-indexed, because we've got imagine our share is about 4.75%, and we've got about a 17%, 18% share in premium, which is what drives our profitability of our business. And despite a lot of people try to pinch a lot of shares, obviously the brand Velvet Touch still endures, and Weather Shield still endures in the minds and hearts of the consumers. So really, that's where we have a challenge is in the mass market and the economy. We've introduced a brand called Dulux Promise Smart Choice in 2020. We've significantly gained market share from some of the players in the industry, including local players, as we did it. But it's plateaued because when the price hike went in, perhaps we took a little more aggressive price hikes compared to the rest of the industry. And we were selling at premiums, Manoj. And as you know, in that category, in economy, you cannot be at premiums, particularly if you're a challenger brand. So we are resetting that base. Hopefully, we should start seeing some gains, but it will take 2-3 months, 2 months of distributor stock, etc., to try and do that, right? So we're not doing a price drop, but we are finding tweaks of how to get that issue addressed. Now, if you look at the coatings business, we've got strong positions in automotive, very strong positions in marine and protective, and we are now building a position in powder. We are very strong in powder in the premium part, but not so much in the mass part. As you heard our global CEO say, I think what we are trying to do is we are trying to say that can we start becoming more significant in mass across all businesses, right? So it's not an easy one. It's something that we have to work through because the expectation is how do we do it in a profitable manner. And you've got players with great positions who will also not easily surrender the positions. So we are looking at innovations. We are working on certain things, quite dramatic stuff, with some of which we are leading the thought process. So we will need time because these are not things I can share in public domain or even for a minute share because we don't know what takes off and what doesn't because in our pilots, some of these have taken already 16 months and still not yielding results even in a pilot lab. So it will take time, but we are clear, Lakshmi, that we know what are the gaps. And, I think in the next 3 years, I believe that our market share will be significantly higher than what we have, right? At least, 2% points is what I want to add in paints and at least 1% points in the coatings business. And I think we are geared. I think if you see our performance from 2021, we are taking baby steps and we are not, worried about it, but we want to do the right thing and make sure we become a meaningful player in the country. Manoj, hopefully answer the question.
Yes, sir, Rajli. Let me just check. Is there any other question in the Q&A? I can't find any.
No, sir.
Okay. Rajiv and team, so maybe there's one last question from my side. Would you be able to give some color on, let's say, the concept of same-store growth versus new store growth, which in new business, essentially the new geographies, how much of, let's say, the growth has come from the numeric reach expansion, geography expansion, etc.?
So, see, typically the same store growth. Let me first give you, if I take a 3-4 year CAGR, right, is approximately about 3 to 4%, and about, on a 10% growth, about 5-6% comes from the new store growth. That's the sort of ratio, 3, 4, and the balance, 6, 7 coming from the new store. I think what we've seen in the last quarter, and if you're talking about the quarter that went by, obviously we've seen flattish, in some markets even decline in the same store, but we've seen significant uptick in the new store, because obviously our distribution gains over the last 2 years are paying huge dividends. And that basically is the premise in which also addresses my point that we need to really look at mass and economy significantly, because discounting has gone up significantly in the market, and we are very prudent in these categories because, we are much smaller. We want to make sure that we are doing it the right way. These are the fundamentals with which we work. We believe in creating a sustainable business model and also category development in these categories. So, that's this answer, Manoj. From a long-term perspective, I see us getting back to our CAGR growths. So hopefully about 3 to 4%, and then 6-7% coming from the new store, right? But at this point of time, in the quarter that went by, we were flat to slight decline in the existing stores, and we grew largely in the new store.
Very clear, sir. Just checking Q&A again. No, there's nothing. Yeah, Rajiv, any closing comments, Rajiv and team, before we close?
No, firstly, thank you. I'm really thankful because I am aware, Manoj, there are multiple calls that you guys are doing at this point of time, multiple companies, and I know all of you, I envy to, don't envy to be in your position. But really, firstly, thank you all for the support, the unstinted support that you've given us. We are on a journey. We are on a journey, as you can see. I've been repeating that since I started the first investor meeting and call. I think we want to be a meaningful player. We want to be, in the top 2, and then slowly, once we are confident that we've got the right footprint and it's what we are doing is sustained, then slowly start moving to becoming the fastest growing paint player in the industry. And hopefully that, Lakshmi and Atharva, since you asked me a number of questions on that in this term, right? So that's what we are looking at. But till then, thank you. We are mindful of the fact that we are playing in an industry which has got multiple leaders and, who also, move with great speed. So, it's interesting times. Thank you.
Thank you, sir.
Thank you,
Thank you, everyone. Have a wonderful evening and a great weekend. Thank you.
Thank you, everyone. Bye.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now exit the meeting. Thank you, sir.